Welcome to another episode of Equity Mates. My name is Bryce, and as always, I'm joined by my equity buddy Ren. How are you going?
I'm good, Bryce. Great to be back for another Watchlist Wednesday. Our favourite time of the week. We get to sit back, relax, and hear from some of the best in the business, a few of their stocks on their watch list.
That's it, and it is our pleasure to welcome back a guest who we've had on since Monday, and that is Nick Guidera from Ely Griffiths Group. Nick, welcome.
Thanks for having me, guys.
So Nick, it's been an absolute pleasure chatting to you over the last couple of days, but I've been really excited for this one. You've mentioned that there are a couple of stocks here that have one, I think, has just IPO'd, and given your experience in small and emerging companies, I'm keen to hear some of the stocks on your watch list. So let's start at the top. The first one is Playside. The ticker is PLY. So for those that haven't heard about this company before, what does it do? And then why is it on your watch list?
Thanks, guys. So Playside is a mobile and online game developer based out of Melbourne. It came on the ASX boards last year. The founder, Jerry Sarkis, his ex-EA Games, which is one of the largest gaming companies in the world. This business has started its history in work for hire, which is a pretty common term that's used by the gaming industry, where design studios like Playside are brought in to help with particular elements of a game. So it might be a particular level, it might be particular artwork, or it might also be developing games sort of on behalf of a particular company. What they have also done is develop a whole lot of core IP in their own games, both in mobile and online. This business has been around for not a long period of time, but what they have been able to do is grow their reputation significantly to the point now where they've continued their relationship with Facebook on the work for hire space, with a new agreement at 90% larger than their existing agreement. But what is most interesting to me about this business is their core IP. So they recently released a console game known as Age of Darkness. That game has been in development for a couple of years. It was pre-released in October. Team 17 is a UK listed gaming development business, has taken a partnership agreement with Playside for the distribution of this particular game. In pre-release, it's released to a system by the name of Steam, and Steam is what you use to download and access games. On release, on its first night, this game was ranked sort of top 3, sort of ahead of some of the biggest games in the world. It's no longer top 3, but it's still in the top 10 or 20 games out there. It just shows, I suppose, the quality of the games that this company are developing, and given it's only in pre-release, there is still 7 to 8 months before we actually see a full-fledged release, which will see incremental revenue opportunities and further distribution. And then on the other side, you've got the mobile gaming, and they've got 2 key mobile titles. They've acquired the rights to Legally Blonde, and they'll soon be releasing a puzzle game on mobile under the Legally Blonde banner. And they've also acquired the rights to The Godfather, and they will be releasing a puzzle game in the Godfather space later in the year. That may have some tweaks. We're yet to see what it will look like, but both of those games have in-app purchase opportunities to monetize. And this revenue, the revenue of Playside, is going to be well supported by both their core IP as well as their work for hire. And it's a fast, exciting growth industry where it's pretty hard to get exposure to in Australia.
It's a fascinating industry, and I'm just trying to think about Legally Blonde puzzle games or Godfather puzzle games and like who would play them. I'm thinking like Godfather themed Candy Crush. I don't know if that's the vibe, but it is a fascinating world, and a world that I don't think I have my finger on the pulse enough of. But you know, we see some of the numbers about just how big this industry is and how quickly it's growing, and it's a really exciting space. We could talk about it for the full 15, but we will move on to the next company on your watch list, and that's Praemium. Correct me if I've pronounced it wrong, but the ASX ticker is PPS. So what does the company do, and why is it on your watch list?
So the company is a financial platform. It's a fintech. It's used by financial advisors to manage sort of client wealth allocation and investments. There's a number of these platforms out there: Hub24, NetWealth, BT Wrap. They're largely used, as I said, by the financial advice community. Why it's on my watch list is because it's currently under an initial takeover offer from NetWealth. So there's consolidation that's going on within the space. The other platform that I mentioned earlier, Hub, has recently consolidated or made an offer to take out Class, which is another financial platform, but typically focusing on self-managed super and how people are structuring that. The reason why this stock is really interesting is not just because it's subject to takeover, but you've seen in the last few months, you've seen a change in CEO. You've seen a announcement that they're going to divest their UK business. Now that UK business has been a drag on earnings for quite a few years and has recently sort of broke even. The market's expecting anywhere between 50 to 100 million for that business. And in addition to that, you've seen record inflows into their platform of advisors shifting client money across each quarter. So you just saw 1.6 billion in the last quarter reported in October. So you've got a really strong fundamental business. You've got an opportunity for them to realize value in a UK asset, which in the past has been seen as core in some investors' eyes and non-core in others, but ultimately by releasing that value, that will see incremental value back into the business, and those costs can be reallocated elsewhere. And then finally, and probably most interestingly, is the company received a bid at $1.50 from NetWealth on Melbourne Cup Day. It's expected that it's been knocked back, so whether they re-emerge at a higher price or someone else comes forward, I think it's a really interesting stock that should be on your watch list.
Follow up there. Sending a bid on Melbourne Cup Day, is that indication that NetWealth didn't really want the market to pay attention? They sort of wanted to send a test balloon, but were hoping that everyone was a little bit distracted, maybe a little bit too pissed to really pay attention?
Yeah, I mean, it's not the first time people have dropped a bomb on Melbourne Cup, but it was an interesting timing. I think one of the reasons why they have tested the market on Melbourne Cup was to see whether there are other parties that are interested in this business, because the business that is currently being divested in the UK has a number of interested parties that are predominantly UK based. But that's not to say that you won't see foreign entities come and take interest in Praemium. You've seen it with GBST, you've seen it with Mainstream, you've seen it with OneView. You've seen it with Iris more recently. You know, there is huge appetite from both private equity and from publicly listed companies and private companies offshore in our financial technology sector. So my guess is it was see what the market reaction was. You know, the stock up until recently, I think it still is today, trading north of the bid price, which suggests the market is anticipating that there will be another bid emerge, whether that is from NetWealth themselves to get access to the due diligence that's required to complete the deal, or from a third party that's not yet currently in the bid process.
Fascinating. It'll remind me that if we ever want to drop some big company news here at Equity Mates, we'll do it on Melbourne Cup Day.
or do it on Christmas.
Or do it on Christmas. True.
Christmas, yeah, exactly.
So Nick, to close out Watchlist Wednesday, a company that I think is just listed, you mentioned off air, and that is Step One. Ticker is STP. For those that don't know, what does it do, and why is it on the watch list?
So I'm really fortunate in my position where I get to meet some really impressive entrepreneurs, and I'd put Greg Taylor, who's the founder of Step One, in that camp. what Greg did was design underwear for the men's market that focuses on both fit and sustainability. He founded the business in 2016, late 16, early 17, and he's grew that business from nothing to sort of revenue north of $60 million and 6% of the Australian underwear market, which is pretty impressive feat in a short period of time. What's so impressive about this business is it's direct to consumer. They don't have a store. They don't have distributors. They literally have a website. They're purely online, and they've managed to get over 700,000 customers in that point of view by optimizing their web platform, optimizing their search engine to ensure that they're up there at the top of the list. When speaking to Greg as part of the IPO process, he called out there just hasn't been a whole lot of innovation in the category. It's been dominated by the likes of Bonds and Hanes and that, for a number of years. And you have seen the emergence of Tradie and others recently, but ultimately the humble men's underwear hasn't really changed that much. And what he's tried to do is bring in both comfort, fit, and a sustainable packaging offering and a sustainable material out of bamboo, so that you've got a pair of underwear that will last and also be comfortable at the same time. What is also interesting about this stock is he's announced as part of the IPO that he's going to enter into the US, and he's also announced that he's going to launch a women's wear. Now, this company, he mentioned as part of the IPO process that a lot of his customers, I think up to north of 30%, are women buying underwear for their partners. So he's got the audience that are consuming his product already, that are on his website. So it's a natural adjunct to add the women's wear range. And the US entry is going to be interesting. He entered the UK a couple of years ago and did that successfully and grown that very, very well. And there's still a lot of opportunity for penetration in both markets. So a really interesting business, an entrepreneur that believes in their business, is generating really good revenue, GP, and even EBITDA so early in their journey. It's no wonder that it was a popular IPO.
I love it. I love retail stocks, and I love an Aussie success story. So
I guess my question, Nick, and I'm mindful of the time, but I just have to ask, like, when you think about a business like this, and you try and think about the total addressable market, or how big it could be. I think its market cap is about 300 million today. Correct me if I'm wrong, but like, how big do you think this could be? Like, can Bamboo Undies be $1 billion business?
Well, I mean, it depends on where the market wants to make it $1 billion business. I think if he can grow revenue to $100 million and have an opportunity to be in market in 3 different markets globally and still have penetration of sort of under 10%, particularly in the more mature markets like Australia, I don't see any reason why the market won't put a revenue multiple of high single digits on a consumer product that generates EBITDA of sort of sub 10 times. So yeah, can it be $1 billion? Yes, I think it probably can. It's probably not going to be tomorrow. And like any success story, entering new markets is going to be challenging. I'm sure it won't all be smooth sailing, but his track record to date in terms of his ability to engage with an Australian audience, grow from 0 to 6% in 4 years time, I think is nothing to be sneezed at. So if he keeps executing, if he keeps optimizing his web traffic to ensure that he's attracting those new customers, that they're repurchasing, that he has an opportunity to develop his SKUs, then sure, it can be. But I'd also caution that in any early stage business, you can have your ups and downs, and so it might not be a straight line to $1 billion.
It is just a fascinating story, and it's a good reminder that as much as everyone gets swept up in the newest technology fad and AI and machine learning and everything, that sometimes the humble undies can create a great business with the right people at the helm. So it's a fascinating story, and full credit. You think about when we started Equity Mates before he started this undies business.
I know.
And he's IPO'd.
Yeah. Wow. Thanks for the reminder. Well, Nick, that brings us to the end of today's episode. Thanks for sharing your 3 stocks. As a reminder to the audience, it was Playside, Praemium, and Step 1. So this video will be available on demand after this if you'd like to go back and listen. But Nick, we'll be closing out tomorrow with your thoughts on what's to come in 2022 and also uncovering the next Afterpay. But until then, it's been an absolute pleasure as always. Thank you for your time.
Thanks, guys.
And that brings us to the end of our Watchlist Wednesday. Check it out on demand if you'd like to know more, and head to equitymates.com for plenty of other watch lists from the experts we've spoken to. But as I said, tomorrow, closing it out with Nick. It's been a great week, and can't wait to talk about the next Afterpay.
Can't wait.